Hello everyone, thank you for attending today's webinar. Hope you and your family friends are staying healthy. As you know, the whole world is going through unprecedented times and businesses are suffering drastically, some more than others. And as a firm, a day doesn't go by where we don't come together, a team of 250 plus people, and trying to think of creative ways where we can help our clients reduce the cost during this time where the revenues have declined big time. So one of the many ways we have been helping our clients recently is with their property tax assessments. They have started receiving those notices from their city and counties, and more or less the property taxes are similar to the prior year. But however, as we know, the revenue has declined drastically. So we are going to discuss those things in detail, so by which we can help our clients. Before we get into today's topic, I just want to share some survey that was released by McKinsey day before yesterday to give a sigh of hope to most of our people and audience and clients in this webinar, wherein they did the survey for US, European countries and Asia. And what they found out is the confidence among the businesses and consumers is coming back. It's slowly but surely. So that's a sign of hope, and hopefully we all shall get past this together from there on. So now let's get into the today's topic, where we are going to discuss about the property tax assessments. So first and foremost, which business should apply and file the appeal? Again, any business whose income has been impacted by COVID-19, they all should go ahead and file the appeal for their property tax. Typical examples of clients that comes to our mind are hotel clients, motel clients, anybody who has to do with the real estate. Those are the people that would be actually qualifying for this kind of a help that we are trying to provide through this webinar. So there are two types of relief that can be availed. One is the disaster relief, which anyone who has gone through a physical damage due to some natural calamity like earthquake, tornadoes can qualify. And the next one is the economic relief, wherein the business that have been financially impacted, again by financially impacted, as we know, where their revenue has gone down big time, and most of the time the expenses are still the same, more or less. So those are the two things that are available at the moment. And the next is what are the methods that the city or county officials use when they send the property tax assessments to their business owners. So one and foremost is the cost method, wherein they see, if let's suppose they have a property which is in Atlanta downtown and they want to build a motel today there, it costs $10 million to build a 100-room property. So even though the client may be having that property 5 years ago, they're going to see what is the value it will take us today to build that. So based on that, they will issue the property tax assessment to the business owner. So that is called cost method. Other one is the sales method. So what is a sales method? Wherein the city county officials, they go online, they look into the data of the recent sales transactions that happened in that area, in that vicinity, and come up with an average value of that property. And based on that, they issue the assessment for the property. And last one is the income method. What is the income method? In income method, actually, the property tax is assessed based on the revenue of the property. So that's the method we are going to be discussing more in detail later. And this is the way where we can actually help the client, because most of the time during this time, the revenues have gone down. So again, income method is where, let's suppose a motel was having $1 million, give you an example. We have many motel clients and they are very successful people. But again, nobody saw COVID-19 coming and they took a big hit in their revenue stream. And let's suppose a client was having a revenue of $500,000 in the month of February. The same revenue became $400,000 in the month of March, and the same revenue became $50,000 in the month of April. So you can see how drastically the revenue has decreased, but the county is still going to issue the property tax assessment, which our clients have already received based on the last year numbers. They just spit out the same notices and we know the revenue has gone big time. So again, that's where we will help our clients. We use our expertise and we have been helping already many of our clients at the moment. So again, when we are talking about this income approach, one thing we have to make sure is the county never uses that. They don't prefer this method because if the revenue went down, they will be able to collect less property tax, which they don't want. At the end of the day, they also want to collect as much tax as they can so they can also run their own expenses to run their staff members and everybody. But at this point, from our clientele perspective, we have to make sure if their income has decreased, which mostly we know has, this is the approach we need to file, we need to fight for and get the property tax assessment appealed. So again, typical owners, as we said, is going to be anybody related to real estate. Doesn't matter if the business is a gas station, but if the owner has the property, so his property value went down. So anybody who has a real estate is the person, potential business owner where we can help them big time. So again, without getting into further in details, now I'll have Hema Mehta, our senior accountant with the firm. She will be helping discuss how the firm has done and help many clients and how income approach can get into the details and help the clients. Hema, over to you. Thank you.
Thank you, Kapil. Hi, everyone. Hope everyone's having a good afternoon. So really, we want to talk about how we can help you. So as we continue on this, we would evaluate the reduction in income as the basis. And later in the presentation, Shailesh will go over the process for appealing. We would prepare an analysis of possible taxable value. So some of this might involve some projections, of foreseeable income, especially for these impacted businesses. We would also be able to explain why the business should get a tax reduction with the departments that will be discussed further later as well. We would explore and pursue all reasonable relief. So we want to definitely help all of our clients get this benefit. And we would try to achieve an outcome that is in the best interest of our client. So in the past, our firm has also helped the gaming machines or COAM people fight assessments that were issued by the state, and we were very successful in getting it appealed. So based on our results, we generally work very well because not only are we an accounting practice, we're also an immigration and litigation practice. So definitely having an attorney in-house would help us, because if we are not able to complete the first two, we need an attorney on hand, and we have them readily available, and it would be a much quicker process for us. So now I'm going to go into a brief example. These are generic numbers, nothing specific, but just to give an idea of how much of a tax difference that this should be able to make for you. So this is, the first part is going to be if the COVID never happened, what the general assessment looks like on an income approach. So let's say before COVID, your income was around $2 million. This room multiplier is based on other factors that are like location, management. So for example, Georgia might have a smaller room multiplier compared to a property in California or elsewhere. So right now, just for this example, we've chosen 3.5. So basically, if we multiply the 2 million times the 3.5, the hotel property value is around $7 million. Generally, the assessed property is assessed at a 40% of the property value. So if we take 40% of the 7 million, that puts us at $2,800,000. Now, the millage rate is also dependent on location or area. So for our example, we took $32 per $1,000. So essentially what it means is on that 2.8, if we were to divide by 1,000 multiply by 32, the property tax value is $89,600. So this is the value of the property tax that you would have paid before COVID came into the picture. Now, let's compare now that COVID has affected all of us. So now that COVID has affected, now your revenue has dropped to $1.6 million. This room multiplier has changed just because now, even for example, if someone's trying to sell a property, the supply is available, but the demand of people wanting to buy has decreased. So in turn, the room multiplier would decrease for people to try to be able to sell their properties. So based on the room multiplier we have here, the hotel property value is $4.8 million. The assessed property value at 40% is $1.92 million. So based on the same millage rate, which we haven't changed in this example, but that could also factor as well. But just to keep it simple to see, according to this same millage rate, the property tax would be $61,400. So just to say, how much are you really saving? So if we look, there's a decrease in the fair market value of 2.2 million. The assessed value has decreased by 880,000. So based on the same $32 millage rate, the savings in the property tax is $28,160. So as we can see, just a decrease of income for the business of $400,000 can save you $28,000 in property tax. So I'll now pass it over to Shailesh to discuss what are the steps in being able to file this assessment or appeal.
Yes, sure. Thank you, Ima and Kapil, for nice introduction about that topic. So hello everyone, good afternoon and good morning, depending on your location. So as Ima and Kapil mentioned regarding all this matter, so before I start that stage 1, 2, and 3, so I'll give some basic idea about our firm when it comes to dealing certain tax matter as well as some sort of legal matter at the same time. And based on our clientele experience, which are based in maybe throughout the Southeast and from Atlanta office, so we are serving small business clients, including hoteliers, out of 50 out of 19 states. And at the same time, your property might be not in Georgia, but somewhere else. We also have throughout the firm, we have 18 to 20 different state attorneys enrolled. So based on that, that gives some sort of comfort level for our client as well as us. So wherever your property might be, so we can just maybe find out all that proper detail depending your county or city location, and we can just do best whatever is for our client, and that ultimately will help you and us also. In the same line, couple of other points. So just to share with everyone to give that comfort level when you go through the webinar. If you have some question, we will answer. So once you make up your mind regarding going for this property tax assessment, and we as a combination of CPA and law firm, we can help better. And on the same thing, just to share with all of you as a attendees. So somewhere in Savannah, Georgia area, last year there were maybe close to 45 businesses. So they were given notice from Georgia department for sales tax and related matter. And what they did, they approached their local CPA, and since CPA were having good terms, relation, no issue and everything, but they were not comfortable working or doing all that appeal part, assuming they thought they cannot do it, right? The same group, when they approach us, so team of our accountants, we did all that paperwork since we can analyze that numbers properly there. So we did all that part, and with having attorneys in our firm, so they were attorney on the record, and basically all that 45 and maybe except one or two we got all that notices waived, and then we help all that client. So just to give that part. Coming to this particular process regarding property tax, and as Kapil mentioned, like how it gets affected and all that part. So just comparing with like, yeah, so this is not the same time, this COVID time. So all the hoteliers especially during that economic downturn back in 2008, we were in business, and we hope like many of our clients and also attendee on this call. So they had like all this business downturn back in 2007. And based on our experience, so what we know, like, so 7 out of 10 appeals for the very same matter was successful in favor of our client. So, or this is in general, but the same time, like when we compare this COVID with 2008, so big difference, we all know. Right now, like, yeah, so basically whole country, or we can say whole world is at stop or hold. So in that case, based on whatever the government is giving all these incentives, so all that part is good. So with that part, and based on like what we know, the process, and like based on our expertise, so we don't have any doubt like why we don't get 10 out of 10 as a favorable result. So for that stage 1, so as a process, once you know this is good for you, so you can approach either your CPA, or like you can approach one of us, and we can go through preparing the proper paperwork, prepare the case, and submission of this appeal. So that will be the first step, and that appeal will be submitted with the whatever the tax board assessor of your county. So that is stage number 1. And as I say, like, so more than likely everything will go through. Very rare. So the step 2 or stage 2, hypothetically, let's think like, okay, for whatever reason, so the tax assessor board, they don't approve your kind of appeal. So by default, it will go to the next level, which is whatever, and this name can be different depending on state or locality name, but same way. So that will go to the next level, something called jury. And again, like another good news for the benefit of the business owners. So this jury will be like, they will have like more interest of in the for the community, local businesses, development of all the businesses. And during that jury, like grand jury, like a lot of business owner and local people are part of that jury. So again, more chances like the result will be in your favor, because more interest are covered in this particular stage. So that is stage number 2. And for whatever reason, like if we are still not successful from stage 1 and 2, so coming to this stage number 3, and that's where like one of our attorney get involved. We file all that paperwork to the whatever the applicable court in that county, and just we work through that part. And based on that another experience, so we went for one of our client, we went to like tribunal court, and we got like all that favorable results. So basically having this kind of good combination of attorney CPA, having some number sense that part, having like a good clientele like you, so we can just make a good kind of benefit result for all of us. So that is the kind of 3 process. And just to give like, okay, so depending on like how and when somebody should file it, right? Once you make up your mind, like your business is kind of compromise this revenue and everything, once you want to file, so depending on like your location, so generally like every county, they will send you the notice of assessment, and generally they give like 45 to 60 days, and this is just big general number, and so within that many number of days, you will have to file that appeal. Again, time sensitive, so you will need to make a call in time, and just to based on our clientele thing. So just to give like a big picture, some of like number of days there. So like businesses in Alabama, generally they get assessment in April to July, and they get 30 days. California, they get 60 days. We have clients in Colorado. They get notices in May. They have 30 days. Again, Georgia, they get notices in April to June, 45 days. Mississippi, they get in January. They have to file in August. North Carolina, they get notices in January to June. They have to file in 90 days. South Carolina, they get notice in January. they have 90 days. Tennessee notices in April to June and 45 days. So this is the big summary regarding the process. And just to share like latest update with all of you as a business owner, I'm sure like many of you or almost all of you have applied for PPP loan. And based on the update like we got from the government yesterday, so this PPP loan, whatever that 75% payroll was requirement to pay to the employees, so that has reduced to 60%. And whatever the number of weeks given to use that thing, it was 8 weeks. So now they have extended to 24 weeks. And this part is approved at the House level. It will go to the Senate like next week. So more than likely, yes, all that will be like good news for the benefit of business. So just wanted to share all that part. If you have any question, like you can use the chat box or just send email to either shailesh@chugh.com, kapil.handa@chugh.com, or hima.mehta@chugh.com. So that is from my end. Thank you, everyone.
Thank you, Shailesh. Thank you, Hima. At this point, again, our chat box is open. Please keep on sending us the questions. We'll get to them one at a time and reply to all your questions. Just to carry on whatever we have discussed, any questions you have, please feel free. But again, these are unprecedented times. And one of the questions I think we got a client the other day, they were asking, we are in the state of South Carolina. So can you help us with that? So Shailesh, any insight on that? In the state of South Carolina, we can help with the tribunal and all that?
Yes, Kapil. Yeah, so based on what I mentioned during my details, yeah, so more than likely, given all these parts, so we are very confident things will go in step 1 and 2. And at that time, like no attorney is required. And if we happen to go to stage number 3, so at that part, so we do all that procedure and paperwork. Only thing what we need is like local attorney to file, and based on our like presence. So if particular state is, we don't have any our firm attorney, so only thing like we can hire like local filing attorney, and we can handle all that part. But to answer your question, yeah, we can handle any business in South Carolina as well.
Okay, great. And Hima, can you touch upon when you mention all this income approach? Do I have a choice as a business owner to go with this income approach? And why the county always come back and just uses the other two methods? Whatever the sales evaluation and cost. If you can elaborate on that, why would not they kind of take into consideration the interest of the business owner?
Yeah, sure, Kapil. I believe what happens, especially with the assessors, is they look at whatever information is available to them. For the cost method and the sales evaluation, those are general public knowledge type items. So you could go to the website, see, what the previous property was sold for, or what the going rate is. But as far as income is concerned, that's very subjective to each business. So it could be your competitor across the street is doing very well and you may not be, but that would become a bigger factor, because if you just compare based on sales or by cost, it could look that, you guys are running a similar business, so the assessment should be around the same, but the income might, more impact you just because your income may be less than the other properties surrounding you.
Yeah, great point. Availability of information. I think, as you rightly said, having the sales transaction pulled up from the relative area or the cost which is going on a day-to-day basis is a easier way to find out. But yeah, sales numbers, what is going on in the current method, there is always a time gap. So yeah, good point to understand. Other than that,
Kapil, I think there are a few questions, so if you can just go over that part, so that will clarify everyone's concern. So
they are sending. Okay, sure, great. So let's.
So I think one of the questions we received is the fee structure for the service. So, once again, that's something that we would be more than happy to have, a free consultation. We can meet, we can discuss, kind of get an idea of what your property is like, how much you've been impacted. And according to that, we can proceed further. And I think that would be like the easiest way. So just like Shailesh mentioned, our email addresses are available. So please feel free to contact any of us to further discuss this matter.
Yeah, another question on the chat is like, would you suggest making an appeal after the full calendar year when we would know how much income we have in 2020? Yeah, so that should be fine, but but main thing is like we need to whatever this appeal, and again like throughout the country, through different counties, they have different cutoff. So mainly your appeal will be like within that prescribed period, and only thing like yeah, so if you are doing before the end of the year or like after, so whenever like you are doing after, for example, Georgia, so if the cutoff is June 15, so we should file now. And what we do like yeah, so use the projection from July to December and just try to make it tax reduction in this year. And another good news, so once we get like this benefit of tax reduction this year, and that will flow to like next year also. So this is whatever saving Hima mentioned. So that is not only for 1 year, it will be more than 1 year, right? But again, if your particular property or state is in January, then yeah, waiting to complete 2020 will be better option for you. Another point is if another question from the audience, if PPP is increased to 24 weeks, then we still need to keep all the employees. Yeah, so the main thing is, yeah, so the big change here, like, and assuming everything will go through Senate next week also. So mainly like the hoteliers and restaurant industry. So even though like when we know, so by having like good unemployment insurances premium, so like a lot of employees, so they are they prefer like not to join the work, and at the same time like given this health risk, people or employee are not comfortable getting back to the work also. So based on that, like since like government has given more time, earlier it was you were supposed to rehire the employees by June 30, which government has extended all the way up to December 31st. So basically just allowing more time to business to kind of get back to the normal, and at the same time with that longer period, employees will get back to the work also, right? So with that part, yeah, so 24 week. So as long as you maintain your number of employee over the period and your total payroll has not got down, and this is primarily very important to get the forgiveness of PPP loan. Yeah, so that will go through all the way up to end of the year.
And one quick thing, I think it's also important to note, this savings may not be just for 1 year. It may help you for multiple years, similar to people who know about the homestead exemption, it based on the value that carries forward. So also, what we illustrated was a 1 year savings potentially, but that could also carry forward to maybe 2 years or 3 years, just based on how things, continue, and if we're able to get, when we're able to get out of this situation. So that's maybe something to keep in mind as well when, considering whether this is something you would be interested in.
Another question, like what information do you require from us? Yeah, so one thing is this property assessment notification and like records of your sales and income tax return, and that will be good enough information for us to analyze the case, and based on that, like whatever required further, so whoever is working on your case, so they can approach you. So but to begin with, assessment letter and sales record, that's all we need to start the process. Another question, what happens in case of triple net leases? Would it be possible to use tenant business revenue to file the appeal? And just if I understood that question correctly, so basically this is a landlord, and so landlord is the owner of this property, and then they have leased to that business which is tenant. So as long as, like, let's say when tenant is making the payment, then basically there is no kind of economic hardship. But for whatever reason, what if your tenant is restaurant and they just close down business? So whenever you lose your revenue as a rent income, so you as a landlord or property owner, so whatever your income reduction, it can be rent also. So whenever there is some economic hardship from the rent income lost, so based on that you can consider yes. But if your tenant is paying you based on whatever means, then you cannot.
Any other question, Shailesh? I cannot see the chat box.
So, Kapil, we just got a new question if you would like to cover. It says, who shall we talk to for loans other than PPP and EIDL?
So any other loans?
Yes, other than the PPP and the EIDL.
So again, your bank, your local bank, whoever you have the business relationship should be the first point of contact. Any loans that you want. Again, as we know, PPP and EIDL loans are governed and by SBA and supported by the federal government. But there are many other loans which are driven and formed by the county or city level. Again, we have some clients in Florida where they also got some loans at the county level. So again, these are the loans, but how it worked, their point of contact was their local bank, and they approached them, and and that's we are learning more than ever during this time that banking relationship pays off big time. We have many clients who are very established players, and 50 to $100 million in balance sheet, meaning any given day they have 7 figures cash sitting in, and they never ever cared for the banking relationship because they hardly needed money. They are cash rich companies and they have gone through these things many times over, but they never experienced something like COVID, like many of us. So their loans, when they applied to the big banks, Bank of America's and Wells Fargo's of the world, got approved, in 8, 10, 12 weeks. Whereas our small business clients who were having a good business relationship with a local cooperative bank, banks, the names that you would have never heard about, they got their loans approved as quick as the same day. So a lot of our clients, a lot of us learned the hard way. But yeah, banking relationship and going to your local bank is the way to go. Hema, that sounds right. Thank you.
Thanks, Kapil.
Yeah, Kapil, next question is, can you speak about the Main Street Lending program? Are financial institutions taking the applications? So,
yeah, that's a question that we are getting asked by a lot of our clients where they were not able to qualify for PPP. So again, for the benefit of the audience, PPP loan, one of the conditions was, you cannot have more than 500 employees. So, a lot of time when people have big, so some of our clients, they have cross-border operations and they do have more than 500 employees when they combine all the employees all over the world. So that's the reason they missed out on this PPP program, which was, as we know, one of the best programs for the businesses. So those businesses, yes, will qualify. And the answer is no, it is not yet open to the public. It is still a regulation on which the government is working on. And we have already clients lined up for which we have already done the homework. And once the application is on, we will start filing their application. All the information is ready for those clients. But at this point, yes, we are still waiting on the green signal from the federal government.
Thanks, Kapil. So SP, I think you can get, Shailesh, you can get the next question. So it says, I received a PPP loan of $113,000 and an EIDL advance grant of $10,000. but also got an email 2 days back saying your SBA application is ready for the next step. Create your SBA EIDL portal account to provide additional details or requested documents. Now, the client has now completed the portal login and provided all the details, so he is qualified for a loan up to $150,000. So the client's question is, can they still submit it even though they already received the $113,000 for PPP and the $10,000 advance for the EIDL?
Yeah, sure, Ima, I will answer that. So the first or quick answer is yes, and there are like as we all know, since like all this started like end of March, a lot of ongoing changes starting from the limit. So we heard like this EIDL was supposed to be given 10,000 grant in 3 days. It happened in like more than 2 months. At some point, like SBA changed the policy. They gave just 1,000 per employee. But one big picture to keep in mind, like, so 113,000 PPP loan. So whatever the 10,000 grant received at the EIDL, so that will be like netting off when you go for the PPP forgiveness. So that will like in total you will get forgiveness for 113. To answer about if you should go for 150 or not, given your like business requirement, like so and again give up based on the location or industry, you may need like more cash to bring your business up. So as long as you are not going to use that another 150,000 for the owner's distribution or like maybe not to pay the owner or something. So as long as that 150,000 is your business requirement to pay your mortgage, to pay your insurance, to pay your employee, to pay your kind of rent or whatever thing, right? So as long as the business requirement is there, you can get both. And the rate of interest is like 3.75, and this can be up to 150. So only thing you cannot do from that 150,000, you cannot pay off the other mortgage, or it's not like sitting on cash, but otherwise both of them are for the benefit of business. So yeah, you should be able to take both. Yeah.
Thanks, SP. And also for our attendees, we also have our attorney, Jamin, who has joined us as well. So I think he might be able to cover this next question. What if the tenant is paying property tax or reimbursing tax to landlord, which is not part of rent? Would they still be able to benefit from this appeal?
Hey, Yima, thanks for the question. So it really depends on if it's a triple net lease, then the tenant might have some recourse and be able to appeal depending on what the lease says. But if it's not a triple net lease, then it's the landowner themselves that have to make the appeal on the property's behalf and take it forward from there.
Yeah, Jamin, like maybe another legal question. The question is, any thoughts on business interruption insurance?
Yeah, that's been a good way to go about trying to figure out whether your business can sustain the pandemic. And so there have been different companies that have been offering it, and it's been more out there than usual. It just depends on what type of business you have and kind of what the policy limits are and that type of thing. They're obviously going to be a lot higher depending on the hospitality and travel business versus other ones, such as C-stores, gas stations, that type of thing. So I think it's a great tool to have, but definitely something to look into.
I think another question, like not that on the topic, but looks like based on our location. So question like, which one of you from Los Angeles area? So like unless we have not covered like all that part. So basically Chugh firm, so we have offices, 6 offices in US. So you can contact any of presenter from this webinar, and then they will be happy to connect you with anyone in like California, Northern California, Southern California, New Jersey, New York, DC area, and Atlanta. So this is our like office location. So we'll be happy to connect with you right person, which is like closer or local for you.
Another question I just saw is, can you still apply for mainstream lending if you received PPP and applied for EIDL 2 months ago and still processing it? And the answer is yes. Again, these are different programs. We have to understand if they have gotten the money under which category. So if you have gotten the money under because the business suffered under EIDL, they can still apply for mainstream lending program, which is for the people who have more than 500 people and $15 billion. So mainstream lending program is people for companies who have big operations and maybe most likely global. So those are the clients or the people that will qualify under that loan.
Okay, Ima, do you see like any other pending question?
No, I think that we've so far covered whatever's been asked, but if anyone still has any final questions, please feel free to ask. And like I mentioned, we have our attorney here as well, so he can definitely answer any questions. And speaking of, we just had a question pop up. Are you helping in making projections for the rest of the period? I can go ahead and answer that. Yes, we will be available. Like we mentioned before, we have CPAs in office as well. So we've made plenty of projections for various clients throughout the years. So we can definitely help, any person looking for a projection to be able to, assess this and appeal it for your particular business.
Okay. We'll stay here for a few minutes. The last questions, but any other question? Again, as we mentioned earlier, in our brochure, we'll share anybody wants a copy of the webinar, of this presentation, shoot us an email. You have our email contacts, and we'll be happy to take any questions online, offline. If you want to call us, email, we are just a phone call and email away. Anytime, all our colleagues are available. So, we are just one email or phone call away.
Sorry, couple, did someone answer the question about the PPP and the new House bill for the extension to perhaps change it to 24 weeks?
Yes, we touched on that, Jamin. Yes, we did.
So far like approved in House, and we are waiting for Senate. Yeah, that is the update given.
Right, exactly, yeah.
All right,
Sorry, go ahead.
Sorry, we got a question. Our insurance got rejected saying the coronavirus is not covered. What is your recommendation?
So again, at this point, insurance like the business insurance or health insurance? I think that's the question. Are we talking here? If it's a business insurance, I think that's probably not the case. Health insurance, you would really want to contact your health insurance company. That's something they have to deal with you personally. So we won't be able to provide much help there. So that's where we are. So coming back to, I think that was one of the questions that Jamin brought. And so again, Jamin, since that 8 weeks to 24 weeks, it's only passed in the House, and we have gotten so many calls from the clients, and they feel like, this is a big relief for them, because a lot of the clients, let's suppose they were running a restaurant, as you know, and the restaurant is not going to be open. They got the loan today and they are not planning to open the restaurant maybe for another month. So that 8 weeks was a big challenge. So they didn't think that they would be able to consume all the money, that 75% of the money in the payroll in the coming 8 weeks. But this 24 weeks is going to be a lot of help to our clients, where they can come back to the business and, stretch it over the period.
Right, exactly. And then part of it is also the deadline to hire the employees back is it was June 30th, or it was definitely June 30th. Now it's proposed to December 31st, which is helpful as well.
And Kapil, we got clarification. So the insurance they were acquiring about is business insurance.
Okay, so their business insurance got rejected, saying virus is not covered. So basically they are trying to say is maybe they had a loss of a business income, and then the insurance provider came back and they're not pitching in for the loss of income. That's my understanding here, Ima. And if that is the case, again, they would have to engage with the attorney. Again, Jamin, one of our attorneys, he's on the call. We would be happy to, kind of, look into their insurance policy. But if their insurance claim was rejected because maybe because of the COVID, they're saying the business income went down. So that's something we have to really look into the insurance agreement before we can provide the feedback. But yes, we can look into that.
Yeah, I'll just touch on that really quickly, actually. So a lot of there have been a lot of cases already filed out of Northeast, mostly New York, and some of the insurance companies are denying the claim because they are saying that there was no physical damage to the property, and that there were no actual COVID-19 cases in their business. So for the restaurant, for example, they filed a business interruption insurance claim, and it was denied because, like I said, that there was no active employees, so there were no active cases, and there was no physical damage to the property. It was just a loss of business because everything was shut down due to the quarantine order. So I think those are the types of issues that might be coming up. But just like Kapil said, happy to take a look at it and then talk offline.
Thank you, Jamin. So we have a question. Shailesh, I think you might be able to answer it. Do we have to file the appeal online? Not sure what happened. Kapil, do you think you could answer? Do we have to file it online?
Yeah, again, these depends from county to county. Some counties do, allow you to file online, and some are not online. So it all depends on county to county, Hima. And another question, I think there's another question and a request is, somebody's interested in us doing a webinar for global income and double taxation. We'll be happy to do that. If you can please leave and send us an email with your, your details. We can arrange a webinar for you, your group of companies, your group of friends. So yeah, more than happy. That's, we are doing a lot of webinars these days, and having sounds like an interesting topic, and I would be more than happy to do that.
All right, and then we have another question. Can you touch on any other salient features from the CARES Act, like the 100% write-off on property improvements?
So again, may not be for the benefit of audience. If you're C corporation, one of the big difference it made was, the NOL. So NOL meaning net operating losses. So let's suppose, to give you an example, in 2018, which we already filed the tax returns for our clients, let's suppose there was $100,000 loss that the business generated. So in that case, per the new laws, tax laws signed by President Trump in 2017, we cannot carry back those losses anymore. We have to only carry forward those losses, meaning, in simpler terms, 100,000 was a loss in 2018. Even though I might have $200,000 in taxable income in 2017, I cannot go back and offset that $200,000 income from that loss. So that was the thing. But with this CARES Act, the government said, you know what, if you have a loss, now yes, you can carry it back up to 5 years. So if you have a loss in 2018, and if you had profit in any of the prior 5 years, starting from 2013, 13, 14, 15, 16, 17, any of those years, if let's suppose you had a profit, so we are talking $100,000 loss here in 18, and for some reason in 2015, you had $115,000 income, I can go back and reduce my income in that particular year and reduce my taxes. And to just add another great thing on this program is, so today if you're a C corporation, so you would have paid the loss which is equal to 21% of your tax. Basically you are paying 21% tax on your income after the new tax laws. But if you take the same loss in 2015, you are actually getting a benefit of 35%, because in 2015 the tax rate for C corporation was much higher. So you get the benefit of taking it back and getting a refund, and at a much higher rate. So the 100,000 loss which we would have claimed in 2019 or 20 going forward is less compared to the same $100,000 loss which I am not able to claim in 2015 because of a higher tax rate back in 2015. So a lot of companies, HEMA, a lot of C corporations, we helped with NOLs, and they got a big chunk of refund. So IRS really wanted to kind of help them, and they already gotten the refund back as we speak today.
Okay, thank you, Kapil. We have another question. So, do insurance cover loss of profit because of reduced sales? So I think it really depends on your contract with your insurance company. So to get a clearer picture on that, just like Kapil mentioned, if you're not able to determine if that is part of your contract, we'll definitely, Jamin can be involved as well in looking over that contract to see if it's been mentioned or not, and whether, it's been covered within your insurance policy.
Yes, Iman, just to add on that particular point, not in the COVID situation or like otherwise, but we have experienced like our client during this hurricane or tornado. So when their business is property is kind of blown away. So during that downtime, so basically their business is stopped. So by that time they build the new building, it might take 6, 9 to 10 months. So during that thing, so insurance will cover loss of business or profit in that situation. So answer is yes with that respect, but other thing is based on what you and Kapil mentioned. Okay, looks like we have covered.
Yeah, so we've covered all the questions that we've received so far, but if you have anything else that comes to mind or pops up later, please feel free to email any of us, and we'll be more than happy to help you. Or if we're not, I think questions about other offices, we'll put you in contact with someone that would be able to help you if you have properties in different states or something along those lines as well.
Okay, thank you, everyone.
Thank you, everyone.
Thank you again. Have a great day. Thank you for taking the time.
Thanks, everyone.